All right, hello guys, and glad to have you on board again today. We are Wednesday, and we're going to update the flow sequencing on the set of assets that we are looking through over time. And of course, just to remember that the obvious is we're just showcasing them as a kind of examples, and you can decline that strategy to whichever assets in whichever asset class you see fit. The idea here is just to make it happen on a day-to-day or on a week-to-week basis to follow up on the sequencing through time, so that you see how these things works and how those kinds of sets of rules gets to be profitable in the end, not necessarily with predicting the future in the meantime. So that's really where we go. And now back to the S&P 500. Remember that we're still in the same old kind of big grand scheme of things. Flow sequencing has terminated on the third and last flow when we've created and broken through that third range boundary afterwards, but that's necessarily where you should have taken all of your profits, which means we're now more than 6 months late into the party, waiting for the first bearish corrective flow to happen. And as you can see, nothing has happened so far, just making new all-time highs, a very violent attempt in here, but that wasn't successful, that wasn't even strong enough, as at this point the moving average has been bought out very, very quickly, meaning that it was still rising and we failed to actually reverse the flow. So we're waiting for that first flow to actually happen with sufficient enough strength, which means, once again, these kinds of things can happen in which we blow off, but if it's bought out very quickly afterwards, it's still not a viable first flow. The flow needs to sustain itself through time. So that's the essential element in the equation now. So we're waiting for this to happen. Remember, you should not try to profit from the first flow, despite some specific cases which we have mentioned is, for example, if you are having a portfolio bullish exposition to US stocks, you might want eventually to try to take some hedge against these first bearish flows and all sorts of things, as they could have negative impact on your portfolio's return. But despite those kinds of specific cases, if you are actually a flow trader, not doing anything else, you should put your dumb trader kind of casket. And in that perspective, it's pretty damn fairly easily to say that all those kinds of assumptions of portfolio managements and all sorts of things like that shouldn't even be accounted for. So be very, very cautious with that. If you're doing multiple activities with your portfolio, like really long-term investing, as well as flow sequencing, things like that, which should be akin to something like swing trading. And if you're on top of that, like trading intraday or whatever, you really want to have to differentiate between those activities. They are very, very different in nature, and what we're doing in here with flow sequencing shouldn't necessarily overlap with the rest of the other activities, okay? So in here, dumb trader kind of blindfolds on, just be really, really simple and stick to the rules. So S&P 500, you shouldn't even try to profit from the first flow, despite some external forces. In here, as I said, if you have a portfolio, you definitely want to hedge for this first bearish flow. But that's all there is, okay? Nevertheless, if you're just a flow sequencing swing trader, this market is extended, overextended bullish. You shouldn't be bullish, but you can't be bearish either. So it's really the way we go. Waiting for this to happen is the only answer. All right, now if we go for commodities, remember in here we're looking for much longer scale kind of flows. We're in a weekly chart, so right in here there's one update each and every week when you get the candle close, which means most of the time nothing will happen, because remember, when you're in a weekly kind of context, when you're in a weekly reference frame, your contexts are actually quarterly updated, which means the context boxes essentially update each and every quarter. And that means, well, we're reaching the end of the next quarter by the end of this year, which means the next actual pinpoint in this market that matters to us is going to be the 31st of December. Where the heck are we going to be by that date is all that actually matters in here. We remember we had that big, massive first flow following the COVID pandemic and the aftermath of it, where the context have crossed above the rising moving averages, reversing out of a massive kind of multi-year kind of bottom structure, an accumulation that has been lasting for the last decades, though we have in here a sequencing that has happened either in daily chart or potentially in the weeklies in here as well, okay? So it could happen between both time frames, and therefore you should really get prepared for both. So in here, as we've seen, we could either buy the Bollinger Band, which you see in here, which will be the equivalent of following the flow in the daily chart, but it absolutely matches up with the fact that we're also trading the moving average on the weekly, which is also an area to buy. So remember that we said in here we can trade it daily, we can trade it weekly, just depends in here on your assessments. I definitely would tend to say that there's not a chance for us to get to the lower Bollinger Band, but that's also still a possibility. So be very, very cautious with that. Okay, so USD WTI is the way to go for now, waiting each and every quarter or each and every month. If you're trading in a daily, then that's really the way to go. Looking at it at the end of the month, at the end of the quarters, and looking until we get the beginning of something. The beginning of something here means we need to retrace right up to the previous top, which is going to be the area for confirmation. Until then, whatever you do here is speculative. You need to have your stop losses adjusted, and you need to be extremely patient. Looking at the timescales we're in, it's definitely going to take some time. Now silver is relatively similar. As we have seen in here, same story. We have a weekly flow sequencing as well in a massive long-term bottom, which could actually happen in a multi-year low sequencing. As you would see in an annual basis, you definitely have sufficient data here to succeed on figuring out the support. So that's really the way to go. If you see the support in an annual basis, that means you could trade the weekly flow. And this in here is exactly what we have. So remember that for USD WTI and silver, we can pretty much gamble into the actual time frame. We could trade it in the daily, but it's also visible in the weekly. As you could see, silver has had quite of a head start corresponding to USD WTI. We still nevertheless have similar structure. Remember that WTI is currently very massively accumulating on the moving average, just pretty similar to what silver has been doing all through 2022 to 23 and 24 until we actually get that actual first release of energy going all the way up to the previous resistance where we have validated our flow sequencing. Okay, that's the point where all silver trades should now be at break even, waiting up until we actually do something to challenge that status quo. For now on, well, the support context is just roughly crossing above the moving average. So the flow is in here and it's maturing accordingly. So just let it play out. Doesn't matter how long it lasts. When it reverses and goes back to context, that would be the sign that your profit taking should happen after the following third range boundary. So that's really neat and simple, okay? That's really the way to go. In the interim, the only thing you can do if you are in this flow sequencing is to highlight level of resistances. Like for example, there are key level at $35 as well as 40.42, which are technical long-term price area and targets in which silver has had reaction in the past. So of course, if you're not familiar with creating such support and resistances on the assets, well, just make it easy on you guys. You just do nothing. So it's really the way to go. You don't make some arbitrary decisions. Either you know how to do it and you will take marginal profit taking on these areas, something akin to 10-15% at best, nothing more than that. Remember, you shouldn't really like predict where the flows will end. It's just if you want to spare some cash, some intermediate cash, like we're really in some long-term trades in here. Like for example, on silver, I'm in this fucking trade for more than 2 years now. So it's really something that might have some interest costs or the necessity to lock on some partial gains in the interim. And that's exactly the kind of things that you can do if you have highlighted resistances. Like I shared my personal profit takings around the $35 mark because there is a strong resistance in here. The next area in which I will lock on some partial gains will be the 42 area. Okay, so somewhere around this area. It's not necessarily at $1 precise target. Okay, so that's really the way to go. So that's it for commodities. We're daily, weekly, hard to say. Sounds like it's weekly, looking at how long it takes. Silver's already validated and getting to confirm. On the other hand, as you would see, WTI clearly doesn't so far. Okay, so it has the context is crossing above the moving average. That means we've reached sufficient maturity, or we will reach sufficient maturity by the end of the year to eventually start to figure out about potential pullbacks. If they are sufficient enough, that means profit taken will have to be performed afterwards. Okay, so that's really the way to go. Remember, the sequence happens in an order, and you need to validate that order first. So let me just reiterate that statement with the actual sequencing in front of your eyes. So remember the way it happens. It happens in a sequence, okay? You break the top It's really, really essential, okay? As you are in a second flow now, okay, remember, what happens in here is you break the top, and then, okay, you need to have the context outside the average, okay? And it's a necessary step. Remember, that's a step sequence. Only then you look for the third range boundary. The only exception to that rule is the third flow, who doesn't necessarily require the moving average to cross over the context. The context to cross over the moving average, okay? As you would see in here, so long as you cross the top, you will exit at the following third range boundary. Not the case for the second flow. That's a very, very important kind of sequence alternate in here that some people haven't figured out. So I really wanted to state that one clearly, okay? First, you break the top. You get to cross over the moving average. These two can somewhat rarely, I mean very rarely, be reversed. That means you actually cross over the context, cross over the moving average before breaking the top, but most of the time it really doesn't happen that way. But you need to wait for this until you look for that. Okay, it's really, really essential for you to figure that one out. Okay, so for silver, as you can see, we're barely getting it to cross over, so it's the beginning of time in which you kind of start to eventually look for potential third range boundary afterwards. All right, so that's it. Now cryptocurrencies, very, very quickly, nothing new in here. Remember that for Bitcoin, we had a 4-hour sequencing flow. I'm just going to look at it in the daily chart. That sounds better for me. Okay, so remember we were in monthly charts in here, potentially even quarterly kind of systems, but as you would see in here, it doesn't look like we're creating in the daily chart. So Bitcoin has followed a 4-hour sequencing. First flow, second flow consolidating in here, going right back to the Bollinger Band. Second flow has been very, very massive. Here as well, we're tracing down to the Bollinger Band where entries were made, and then followed through with the third and final flow. Just like we reiterate, remember that the S&P 500, as one example to showcase, the third flow could overextend. It's really not necessarily a problem. It just means so long as Bitcoin reverses strong enough to create a third range boundary on the 4-hour time frame is the exit point for your third flow. That means you can stop being bullish on Bitcoin. That doesn't mean Bitcoin will stop there. Remember, it can do just like the S&P 500, keep grinding its way higher, okay? Doesn't really matter. But what happened to the S&P 500 doesn't say anything about what's going to happen to Bitcoin or any other flow sequencing you might be trading. So just very, very clearly separate things around. Don't ever try to say, well, this asset does that, so this one will do this. There's no correlation kind of effects when you do dumb trades like that. Just be dumb and follow the rules. Okay, so for now on, we're far off from eventually reversing the 4-hour context. As you would see in here, be very patient. To eventually do this, Bitcoin would have to go down to 90K, to 80K or so. So for now on, we're far off from doing any such a thing. So just let it play out. Be very, very cautious until then. The Ethereum case is slightly different because in here everybody is just scratching their head on how the heck could Ethereum still be lagging so much. Yet we have the similar structure in here with a first flow, a second flow. So there is kind of a very similar structure from Bitcoin and Ethereum. But the truth is that the majority of their cycles is just significantly different because ETH is still far off from confirming this one. Okay, so be very, very, very cautious. Okay, it is absolutely necessary in here, and we're one of those rare examples in which, as you can see in here, we could see the context, the 4-hour context crossing over the moving average, as we still haven't actually broken the top. So as you would see, this is kind of weird. Yes, it is, but that's the way to go. Remember, the structure tells us the third flow and final flow doesn't pay attention to the moving average position. It's just we need to get the break above, and only then you will look for potential third range boundaries. Okay, so be very cautious with all that. But Ethereum for now on, yes, is lagging. Why? Who actually cares about that? But all you know is that for now on, it's a 4-hour sequencing that needs to break the 4,000 mark first. Once we get there, only by then you will take your profit on the following third range boundaries. Okay, that's all there is. Now we have alternate kinds of structures. One of very intrinsic one is that we finally have the first flow confirmed for Atom. Though remember, Atom can trade on a monthly basis, eventually on a quarterly basis in here because we have created quarterly based range. Remember, you can see in here that in a 3-month kind of time scale, you have sufficient vision in here to say, okay, we definitely have a big, massive range in here. So that means we could trade 4-hour and daily. So in daily, well, we are far from doing any significant kind of things because for now on, the moving average is bearish. So if we get to cross above the moving average in here sufficiently and durably enough to actually see this context crossing above a flat or slightly rising moving average, as you could see, bear estimate that this could happen earlier Q2 next year. And nothing beforehand, because remember it's a matter of time. So if and only if this happens, I mean Cosmos not consolidating until early next year, and if that happens sufficient enough to move out the context, then we could have a flow to trade on the daily. That means following a third range boundary. Remember, you need to have this one. You would be able to buy that moving average, expected to be somewhere around $9, and this would trigger a second flow on the daily chart. Okay, for now on, all we have to stand on is a 4-hour chart, which has confirmed what we wanted. As you can see, the context has crossed over the rising moving average. So congratulations, Adam. Only once you will terminate that thing, because you can still go higher, but once you get the third range boundary, you will be able to buy any retracement on the moving average. Okay, so that's really the way to go. Okay, so now you have an active 4-hour flow on Atom, but it still requires a third range boundary before being tradable. Okay, so you need to see the bulls taking in control, building a third range boundary, taking profits, and then only then you can buy the moving average. Okay, really be very cautious with that. Okay, no third range boundaries, no buying. Okay, it's essential for you to understand that one. Okay, now switching to another one that we've been following, which is Chainlink. Well, Chainlink, as you would see, could trade on the monthly. It's a big range, okay? Could also trade on a quarterly basis in here, as we have touched on this massive support in here, okay? So same thing in here, we're going to assess the daily, and in here, oh, slight difference. You could see that there is a first flow that looks like the daily has actually done something in here. The context has crossed over the moving average. We can see the third range boundary. So this is where you wanted to buy Chainlink. So Chainlink has now retraced positively out of this thing, and yes, remember we could also trade beforehand Chainlink on the shorter time frame when we had like a first flow, massive second, and the third flow in here would have been traded at the Bollinger Band. So if you have traded both, well, to me that's not a problem. Remember that it's two different time scales, it's two different trades, both are actually validating the rules, so god damn it, you can trade both, and you could actually definitely be fine with that. So remember, if you've traded the fourth sequencing, you should have bought in here. Okay, and for now on, you should still be in that trade. Your stop loss should be somewhere in here, and you should still be in that sequencing, looking for the third and final flow, while still, in the same time, have validated the daily chart rules, which you could still trade as well on the daily chart, where you would have bought in here at the moving average price. Same story, maximum stop loss in here is at the bottom, and basically you're letting yourself ride until Chainlink breaks the $22 mark. It's really that simple. Okay, so you could definitely do both on Chainlink, and that wouldn't nearly be a problem to me, as you were definitely respecting the rules back in the 4-hour chart sequencing, and you're still very well respecting them in here as well on the daily chart. So as you can see, lots of things can happen with flow sequencing. I am agreed with both. If you are trading flow sequencing in 4-hour with Link, you could as well do it in daily. Both are actually validating the rules. Okay, and just to reiterate for those who've been looking for these kinds of weekly updates for quite some time, it's exactly what we've done with the actual S&P 500. Remember that S&P 500 could very well validate the flow in here in the daily chart as well. But the thing is, back then we were trading this area with a 1-hour flow sequencing, and we ended up figuring out it was trading as well with the 4-hour. We traded it in a H1 time frame. It was very painful and volatile, but we did manage to make some nice profits out of it, which means so long as you respect the rules, you're going to make some money, even though it might actually turn out to happen in different time frames. So same story goes in here. I think both for Atom and Chainlink, they could very well play out in 2 time frames in the same time, and doing any of these two will be profitable normally. Doing both could actually turn out to be as well. Okay, so it's really the way to go. Don't blame yourself. Don't try to find the perfect sequencing. Don't try to find the perfect market forecast kind of stuff. Just try to be dumb enough to figure out if your rules are applicable or not, and if they are, just go for it. That's the way to go. I'm going to leave you guys with that this week. Quick look eventually at Solana, as people have been asking for it. So remember, Solana is sequencing pretty weirdly, but I would say this is still 4-hour, where we have a first 4-hour flow in here, buying the Bollinger Band, massive second flow, third flow in here triggering at the Bollinger Band, and you are in a third and final flow. So 4-hour sequencing, whenever this thing reverses, get the head out of here and don't get to ask for anything more. Okay, so that doesn't mean selling. I know so many people are calling it whatever, just be smart enough. There's no such a thing in the actual flow sequencing. So third and final flow, 4-hour sequencing is valid for Solana, and that's all there is. As you can see, there is no daily flow on Solana. It's gone all the way bonkers in the daily chart, creating the 3rd-inch boundary and didn't retrace to the moving average. So it's really 4-hour only. There's no flow sequencing support on Solana in the daily chart. It doesn't move that way, even though, as you would see, the quality based chart could very well validate such a range. It still means, well, Solana wants to go wherever the fuck it wants, but the flow are short term. They don't extend to daily. They're really stuck to 4 hours, and they're very much reaching the end rather than the beginning. So be very cautious with all this. Like I said, it might be tricky to navigate all these things if you're trying to make sense of it. Though don't do any such a thing, okay? Just be stupid. Just look at the rules. Either they are valid or they are not. If they are valid, you can trade. If they are not, you don't. And that's just all there is. Don't draw any conclusion out of flow sequencing. I'm going to leave you guys with that. See you next week. Bye-bye.